Promised you we'd get you some information now that we're in 2021 about your finances. And we always go to Dennis or Aaron at Fagan Associates and ask those guys because they know. Dennis is here. Happy New Year, Dennis.
Good morning, Randy. Happy New Year to you, too. And a little bit of snow out there, which is always a nice way to welcome in the new year, I guess, you know?
Yeah, it looks fresh and clean.
It does. It does.
You know, you guys are always good for giving us advice on our finances and stuff. And, you know, despite everything that happened in 2020, the market is doing really well after that drop in March, which has me a little nervous, to be honest with you. You know, kind of waiting for the other shoe to drop. What should we be watching for in 2021?
Well, I think one of the mistakes that we make as you move into a new year is kind of prognosticating or anticipating specific returns over the entire course of the year. And 2020 is a prime example of who knows how the year is going to go. So I would say at this time, in investing money, this is how we are investing money given the current environment. We would expect a garden variety bear market or almost in 2021. A bear market is defined as one where the stock market drops 20%, you know, as represented by the S&P 500. We would think it's going to be anywhere from 15 to 25% of pullback at some time, in part because of the run-up after the 35% drop that culminated in March of 20, 65 or 70% from that levels, and in part because I think it's going to be the rollout of the vaccine is not going to go perfectly, either medically or economically. I think there's still going to be some issues. So we would expect the market to pull back and expect a relatively healthy pullback, healthy in a couple ways. Healthy because we need to take a break, and healthy because it is a pause to refresh and will generate higher returns. So on balance, a higher year for stocks in 21, but it will come with a 15 to 25% correction.
Okay. Well, I know the tech stocks were up, remarkably in 2020, and a lot of that, was people setting up their home offices and stuff, which is done. So, do you expect those guys to come back down?
If history's a guide, even in the late 90s when tech stocks ran up, the relative outperformance to the S&P, I think, will continue. Tech stocks, I think the rally will broaden out. It'll include your mid and small cap stocks, and I would also continue to invest in the tech stocks at a reasonable price, and that is the Apples and Microsofts of the world. I would stay away from the Zooms of the world, the Teslas of the world. I think they've run up so much that you cannot practically or fundamentally invest in them at this time.
We're talking to Dennis at Fagan Associates about what to expect in the markets in 2021. Dennis, what do you expect for the hospitality and travel industry?
You know, I think they've jumped up a bit. The airlines have rebounded quite a bit. I think I would stick more with the economically sensitive areas of transport and also some of the building materials. I would stick with the rails. I think I would stick with the truckers. We do own Delta Airline, and we also own Norwegian Cruise Lines, but merely dipping our toe into that water. So I wouldn't overweight that area. Because I don't know how this is going to play out, and I think there's better opportunities elsewhere in what I would see as secular changes in the economy. The home builders, I think, are very well. Some of the commodities are going to do very well as I think we have a global synchronized expansion. So I would look at those areas, prioritize those areas over some of the cruise lines or the airlines.
Okay, all right. Well, what's your best advice for the new year for everybody then, Dennis?
My best advice for the new year is just like right now. You look out the window and it's snowy, and although we said, hey, is it nice, but at some point in time we're looking forward to warmer weather, and I think that's the thing we can count on for the stock market is if you count on the climate, we can count on the climate in the Northeast, we just can't count on the day-to-day weather. The climate of the market is stair-stepping up over the long term, and yet it comes with these shorter-term storms. So my best advice for investors, as it has always been, is adequate diversification and look long-term because that's where you reap the most benefits. The day-to-day is when you get shaken out. So think long-term.
I love that. Dennis Fagan from Fagan Associates, where can they find you if they have questions and want to work with you guys?
Yeah, so give us a call at 518-279-1044. Check us out on the web at FaganAsset.com. or just like us on Facebook. We're happy to speak with you.
Dennis, I appreciate it. And again, Happy New Year, and thank you for the advice.
Take care, Randy. To you and your listeners, your family and listeners as well. Take care.
All right, bye-bye.
This is 99.5 The River.